Great, thanks, Rennie. So today we're going to take a high-level look at some of the activity that's happening in the real estate tech space. Some also refer to it as the prop tech space. So before we do that, why don't we just sort of start with some definitions as well as an overview of what we plan to cover today. So generally, and there's a lot of different ways that people define real estate tech, but generally it refers to sort of the different cross-industry technologies that are changing the way we research, rent, buy, and manage property. So that can, on the residential side, where we see a lot more sort of activity happening today than before. This ranges from companies that are helping you find your home, whether those are companies that are offering online rental listings or home listings, to finance your home, whether those are companies that are providing sort of ways to unlock your home equity or sort of obtain a mortgage digitally. Also closing on your property. So there's a crop of companies now in the title insurance space, the home insurance space, companies that are offering sort of technologies on appraisals and valuations, as well as managing your property. And we'll talk briefly about some of the companies that are sort of becoming sort of tech-enabled full service property managers as well. So there's a lot of companies here. We're not going to touch on everything. Some also categorize the smart building space and a lot of what's happening on the commercial real estate side. We can't go through all of that today, but what we'll hope to do today is just go through, give you a flavor for some of the activity we're seeing and noticing in the space that's growing quite quickly. Before we do that, I think one other thing that's interesting to think about as we continue to analyze and see how the space evolves is thinking about where software and technology actually makes a difference within some of these businesses. Real estate is an incredibly complex industry with a lot of obviously regulatory, a lot of regulation, as well as a lot of vested interests. But it's also interesting to think about this in terms of what Elad Gil mentions here in a 2016 blog post he writes, which is it's always important, especially if we look at sort of innovation in traditional industries like real estate, where to understand where software is really the sort of transformative basis for competition. We'll give some examples of how we see companies like WeWork or Compass, for example, while they are using technology, also expanding quite quickly on sort of human resources, properties, et cetera. So why don't we start by looking at sort of some high-level data and real estate tech investing. To start, I think it's pretty clear to notice that VCs actually weren't always interested in real estate, or rather, there weren't that many entrepreneurs who were pursuing real estate, post sort of recession. If you think about the 2008 to 2012 time period, funding in those years was generally somewhere between 20 to 80 or 90 million. 2012, of course, to just put in perspective based on looking at some of the data or headlines that you might see today, like a $400 million funding round to Compass. In 2012, Compass had raised their first funding round, which was an $8 million seed investment. Actually, back then still called Urban Compass. When we fast forward to the next sort of few years, what we've noticed is that actually investment into real estate tech is growing, not necessarily exponentially, but certainly growing. And we talked about a little bit about some of those areas where we're starting to see a lot more entrepreneurs, a lot more startups sort of looking to tackle problems and solve problems in the real estate industry. Based on the numbers, it looks like funding's already sort of topped what we saw last year, and deals probably will top 2017's total as well. These figures actually don't include WeWork, as well as its affiliates like WeWork China, WeWork Japan, and WeWork Pacific, which all together have raised close to $6 billion in total funding or convertible notes, and we expect will continue to raise funding for the foreseeable future. So you could put in perspective what that might look like if you were to include WeWork in those numbers. Early stage activity, which sort of, as a signal of an area where we're starting to see more innovation, we frequently look at sort of seed Series A deal activity in our database across different industries or technologies. And we have noticed that actually early stage activity has also ramped up in the space. And significantly, actually, real estate early stage funding has ramped up quite significantly, with over 1.2 billion deployed to seed and Series A deals in real estate tech this year. In a few minutes, we'll go through some of the areas where we're starting to see some of those startups. to put in perspective, I think it's interesting. This may not be the most accurate way to do it, but I think it's interesting to think about it compared to the broader financial technology sector, which we look at every quarter in our quarterly report. Some of the companies in what we would deem real estate tech do actually fit in the fintech category. Not all of them are, but I think it's interesting to see if you look at the grand total of funding that's gone to wealth management companies, insurance companies, lending companies, payments, digital banking, et cetera. It's in the 3 to 20 to 18 billion over the last few years. And if you were to compare it to real estate tech, it's really, you could say essentially that real estate tech, if you were to assume based on the size of the real estate market, that it's largely sort of a few years behind fintech. That's not to say that there will be tens of billions of funding to real estate tech, but already we're seeing companies like Compass, Opendoor, WeWork, and others become pretty substantial companies with a large amount of backing behind them. So it's not unreasonable to think that the real estate tech space will continue to see investment over the next few years if we were to look at areas where we would expect venture investment to flow. Of course, SoftBank, it's hard to not mention sort of that run up in funding or investment without mentioning SoftBank. SoftBank is behind several of the leading companies in the space, both in the U.S. and abroad. 3 of them, of course, are WeWork, Compass, and Opendoor, and we'll talk a lot more about Opendoor later when we go through some of the iBuyers. But I think going back to the Elad Gil quote, it's interesting to think about some of these companies in the context of where software is sort of the basis of their sort of competition, as well as what else are they doing. So WeWork is notably looking to seek actually a $35 billion valuation, and has basically opened itself up to partners as well as real estate developers and owners that they want to work with them. Of course, in some cases, in the case of, for example, enterprise leasing, could be deemed more of as a competitor. But WeWork has done a lot in terms of expansion. If you were to look at just number of locations, growing from 200 to well over 400 locations today, has also expanded significantly on the M&A front. Just recently made an acquisition of a company called Team, which is sort of helping them develop out how offices should look or function. And I think a lot of corporations are interested in sort of innovation around sort of office space and usage, which WeWork has pioneered and done a good job of. We're not going to go through WeWork substantially today. I think we could do an entire webinar on WeWork, and we actually have in the past, but there is a link there, which we'll send out afterward, to our WeWork strategy teardown, which we put out earlier this year, and we'll probably update in the future, which goes through all of the detail around WeWork specifically. And looking at another company that SoftBank is put a lot of backing behind is Compass, which is the tech-enabled brokerage. Compass has said that they have a goal of what they call 20 by 20, so 20% market share in 20 of the leading markets. And to do that, they've also looked significantly to M&A to acquire certain brokerages, and you can see how that reflects in the number of agents that they've had over time, from 2,600 to well over I think today about 5,000, but significantly higher amount of agents over time. So again, getting that question of real estate tech versus real estate and how that'll be judged, I think in the future is interesting to think about. Of course, we've also seen a mix of different investors. Traditionally, I think the space has been funded by sort of traditional venture capital, multi-stage, sector agnostic venture capital firms. But now we've seen the entrance of a lot of sort of more sector-specific funds that's cropped up more recently. I'll just call it a few here, like Fifth Wall Ventures, which was announced a $212 million venture fund last year with the backing of a number of strategic LPs like CBRE, Lennar, Hines, and Macerich. Metaprop, which is located here in New York City, also just announced a new fund recently this summer with strategic backing from firms like JLL, Cushman & Wakefield, RXR. Another fund, Navitas Capital, is also raised from LPs in the real estate industry. These aren't the only funds that have done so. There's others as well, but we see this being sort of something that's really happened in the last few years, in which these firms can also sort of strike ecosystem partnerships between their LPs, their companies, and between companies and between their portfolio companies themselves. So we see this as sort of enabling the industry moving forward as well. And of course, real estate incumbents aren't just investing in sort of venture funds. They're also investing directly, either through their own sort of strategic investments or by launching CVC funds. Here are a few of the announcements that we've seen over the last few years, and especially this year, it's picked up substantially with funds like JLL Spark. It's a $100 million global venture fund. Funds like RXR Realty, which just announced a new venture fund, as well as Brookfield, which announced Brookfield Ventures earlier this year. There's also firms like Blackstone, which have been investing in different real estate tech companies for the last few years, including VTS. They just announced an investment in Zumper, the online rental marketplace. And NAR, the National Association of Realtors, also operates a venture fund called Second Century Ventures, invested in companies like DocuSign, which they actually did quite well on earlier this year. So certainly there's a lot happening on the investment front. New investors, sort of big investors like SoftBank, and certainly sort of more startups to invest in. So we're starting to see more activity crop up in the space. So next, we'll just take a brief look at some of the areas where we're starting to see more startups crop up within real estate tech. Largely, we do see a lot of companies now forming on the residential side. Glenn Kelman, who's the CEO of Redfin, has mentioned that no startup, and this was in a report that came out earlier this year, he said that no startup he knows of is vying to build another online portal, and no company in a decade has tried to do that, meaning that a lot of the innovation now is going well beyond sort of what we saw in the last era of real estate tech, sort of the Zillows, Trulias, and Redfins of the world. And now we're seeing a lot more innovation building out on top of that. The real estate tech landscape is changing quite quickly in terms of number of companies and where they fit. This is a map we actually put out in March, which is probably outdated by now, and we'll be updating this pretty soon. But just to get to the point here, that there's a lot of activity happening, across the industry, both commercial and residential. And one theme that we'll talk a lot about is sort of the intersection of fintech and real estate tech. There's a Bloomberg just hosted a conference in which one of the speakers, an investor, a venture capital firm, mentioned that most of the most interesting problems in real estate tech are actually fintech problems. So we'll look at some of those companies that are helping to solve that. But here, just a map of looking at some of where we're starting to see investment flow and some of the companies and where they fit over time. So touching on this theme of sort of real estate tech meets fintech, one of the areas where we're seeing this, and we'll go through a few of them, is on the side of home equity. So in the macro level, there's about 10 million consumers who will take home equity lines of credit, or referred to as HELOCs, over the next 4 years. And the reason for that is that there's a lot of sort of underlying macro trends that are happening. Of course, the cost of capital is rising as the Fed has raised interest rates, and borrowers will be likely to seek sort of cheaper assets, cheaper financing options by securing debt against their tangible assets. Of course, home values have also appreciated substantially. I think data has suggested that Americans have accrued about $6 trillion in tappable home equity. In other words, homeowners can cash out $6 trillion while still keeping, a stake in their home, sort of the 20%, which is the threshold for many lenders. And many Americans also don't have a lot of retirement savings outside of sort of their home equity. So according to ARP, 75% of Americans actually between 55 and 64 have less than $30,000 saved. Meaning that they may need to leverage, their homes to subsidize retirement. So out of this, we're starting to see a lot more companies innovate solutions around home equity, whether those are offering sort of alternatives to HELOCs, whether those are offering sort of innovating around the reverse mortgage or rent to own. Some of the companies here we see include Unison, Figure, which is the startup of former SoFi CEO Mike Cagney, as well as a few others. Some of these are very sort of demographically targeted. Irene is a small startup here in New York in New Jersey that is targeting the sort of senior segment quite heavily. Others don't technically sort of focus on just one area. Of course, you can imagine, with in home equity in general, it's a very sort of defined market that they're looking to go after. But certainly we're seeing a lot more companies here crop up, and we'll be doing some more research on this area over the next few months. We'll actually be putting a post out over the next couple of weeks on this space. Another area we've noticed is companies that are looking to bring sort of the all-cash advantage to home buyers. So over the last 5 years, over 200,000 homes that's worth about $30 billion have been purchased using sort of all cash. And so it can make it very difficult for buyers who don't have that advantage to compete. So there's startups now such as Fly Homes and Ribbon that are looking to bring this sort of all cash advantage to more home buyers. Of course, in doing so, they also are abstracting away a lot of the sort of financial complexities and sort of annoyances that you deal with in the home buying process. Fly Homes, for example, will obviously offer a mortgage as well, and sort of make that easier, and will actually buy the house, for you and make it sort of an all cash offer for you in the markets that they're in. So we're starting to see sort of innovation around, enabling home buying quite easily, and also abstracting away sort of the more complex or annoying aspects of the financial services requirements, and investors, including Bain Capital Ventures and Andreessen Horowitz, have been behind some of these companies that are just emerging. We've also seen more companies on the residential side of startups looking to enable sort of gradual home equity ownership. So Divvy is a company that will buy a house, sort of own it, and then rent it to you. And as you rent the home, part of your rent then goes to establishing home equity or an ownership stake in the home. In doing so, this is sort of blurring the lines between sort of being a renter or being a buyer. But companies are looking to, try to innovate around ways to sort of enable home ownership, and Divvy is one of the companies in the space, and imagine others will emerge in sort of this fractional ownership space as well over time. There's also companies that are, of course, looking to offer the financial services themselves as well, not just being the sort of the abstractors of the financial services. So Blend Labs, for example, when we think about the home insurance market, which is about $80 billion in premiums in the U.S., Blend, represents a pretty significant percentage of the total U.S. mortgage market today, of about $60 billion in mortgage applications flowing through its software. So they provide sort of software to make it easier for, if you're to get a loan on Wells Fargo or et cetera, to make that workflow process easier. And they just recently announced that they'll be actually adding home insurance as an agency or cross-sell in order to just make that sort of clear to the consumer much earlier in the process. In doing so, they believe that you can actually get a significant amount of home insurance business through this sort of cross-sell. So it'll be interesting to see this. I think it's a trend we see broader that's happening in financial services, which is really just being present at the best moment in time and making that offer. And so we expect to see, things like this blend, I think, are quite interesting. And other areas where we see sort of mortgage tech blending with home insurance as well. We're starting to see this Roostify and other providers as well, and a lot of the newer home insurance startups like Hippo and others being sort of API enabled in order to be able to be present at those moments and integrate with the mortgage and closing process. We've also seen more companies enter sort of the title insurance market. Title is about $15 billion in premiums today, and startups are taking sort of different approaches. Some of them are providing, workflow technologies to the industry. Qualia, for example, is used by what they believe is about 5% of the national real estate market and closing process, and they work with title insurers like Stewart and Fidelity National. There's also companies that are actually looking to become title insurers themselves. States Title was just approved in August to be a licensed title insurer, and hoping to use data and technology differently in order to understand defects on particular properties. And Spruce is another company that's here in New York, which is a title insurance agency, and they've worked with lenders and real estate companies through APIs, with plans to be in about 48 states by the end of 2018. Also raised money recently from Munich Re, so potentially could be doing more things on title insurance themselves. So also companies, basically to show you here that the companies are sort of a lot of activity that's happening, not just on the financing of your home, but also on the closing of your property, and seeing some of the different innovations that are happening here. On the rental side, there's also sort of new models that are emerging. We're not going to go through sort of the co-living space, but there are some models worth highlighting here that are making use of flexible leasing, as well as trying to find unique financing solutions in order to lease property. So Bungalow, for example, is a company that leases assets from homeowners, so 5, 4, 6-bedroom homes, in which they repurpose and redecorate, and then sort of also create a vetting and process in order to match renters together. So they'll go through the credit scoring and everything to make it easy. And most of the renters, this is mostly enabling sort of new people who are moving to a city, and they say they believe their renters stay for an average of about 12 months. And they're doing this through a sort of a unique financing solution, so they don't have to give away as much equity, in which they took out about a $50 million credit facility to provide institutional investors to access the lending investments. We also seen a company like Resi, which is buying out the lease on vacant apartments, arranging agreements with sort of building owners, and then looking to attract tenants with the sort of value proposition of saying that they're sort of eliminating, quote unquote, the broker fee, and looking to spend about $10 million over the next year buying out different leases of vacant apartments. So interesting to see some of these new models that are emerging here, whether that's helping landlords find tenants or new sort of concepts on the co-living arrangement that continue to see innovate over time. So we'll be tracking this sort of space quite closely as well. Property management is another area where we're starting to see more startups, whether that's tools that are helping existing property managers become much more tech-enabled, or whether those are companies that are looking to become just sort of full-service property managers themselves, and building out their own internal tech for tenants and owners to use. Two of the startups in this space that have been funded recently are Mind and Great Jones. So Mind provides property management to small multifamily buildings, single-family homes, and then they've built out tools and apps to allow residents to make requests, submit payments, and also provide sort of analytics for their owners to understand how sort of their portfolios are performing. Great Jones is a company that's targeting sort of the Florida market initially, that looks to expand eventually, which is based in New York, but works with local property management teams in Florida, and also is building out a lot of their own technologies, whether those are apps to enable renters to pay, et cetera. So we're starting to see sort of startups look to become sort of the full service property manager and build out a lot of tech themselves to sort of enter this market. It'll be interesting to see how these develop as they expand into more markets over time. And on the CRE side, we're not going to go through a lot on the CRE side today, although, as I mentioned, this is sort of our start of doing a lot more research on the real estate tech side over time. But CRE, we've seen some companies. These are a bit older. These are not necessarily at an early stage as some of the other residential companies we've highlighted, but companies are leveraging APIs, striking partnerships. CompStak, for example, was just received a strategic investment and partnership with Moody's. They are crowdsourcing information on CRE leases and sales. If you think about sort of the largest, obviously, incumbents in CRE data, it'll be interesting to see whether a company like CompStak or others can sort of break through, which is very dominant sort of market share. Reonomy is another company which is aggregating and analyzing sort of public databases to provide sort of analytics on zoning information, sales, debt history. Have raised sort of successive rounds of funding this year from Bain Capital Ventures and Sapphire Ventures. Another company that just recently raised funding today on the real estate data side is Cherre, CHERRE, which announces its seed funding round just recently, and providing enterprises, insurance companies, investors with property data from public, private, and internal sources that they've aggregated. So still a lot of activity happening on the data side. So it'll be interesting to see. And there's also companies that are not necessarily servicing the real estate industry, but are aggregating information for other use cases like home insurance underwriting or others. So we're starting to see sort of more activity on the data side as well. And we've also seen companies that are looking to make use of this for specific use cases, like Skyline AI, which is building algorithms on top of data that they're aggregating across crime, education, property, transactions, and more. And just recently actually used their own database and sort of completed a $26 million transaction for two properties, which they believe sort of sight unseen in Philadelphia, using insights from their database. They just partnered with Greystone to gain access to their data, so looking to make use of this in CRE investing. So it'll be interesting to see, how much of a differentiator AI can be and apply to certain use cases as it pertains to data on commercial real estate, residential real estate. Skyline is one of the companies in this space. So lastly, before we sort of finish up and do some questions, we do want to go through the iBuyer space, which is continuing to sort of gather momentum and people sort of talking a lot about it. So I think we'll go through very quickly on a high level sort of what we're seeing in the space. Morgan Stanley has put a great chart out that looks at sort of online real estate transactions and penetration as it pertains to versus other industries like music, online travel, and gaming. And of course, they have sort of real estate second only to grocery in terms of where sort of online transactions sort of sit today. Although there's a lot of reasons for that. I think obviously local sort of understanding of the market is a big one, as well as sort of myriad others. But certainly sort of this being a use case for iBuyers to sort of enable online real estate penetration over time. So what is an iBuyer? iBuyers are sort of real estate investors that use automated valuation models and other technologies to make cash offers on homes quickly. This is how Zillow defines it. They do a lot more as well, and having networks of people to renovate homes, inspect homes very quickly, and also obviously sort of go through the closing process and others. And obviously there's a lot of cross sort of knowledge needed on the mortgage side and others. So it goes well beyond this, but this is how people define it at a very high level. In practice, iBuying works sort of in a multi-stage process in which sellers, go on the iBuyer site like an Opendoor or Zillow Offers, and they'll fill out a questionnaire about their home. The iBuyers will then use sort of technology and algorithms, going back again to the original point of where's technology sort of the basis of competition. Companies like Opendoor believe the moat is that they can use algorithms and technology better to determine those offer prices. The iBuyers then present the sellers with the offer, typically in just a couple days. It sends inspectors to verify and value any needed repairs. And then the iBuyer will take ownership and charge a fee, largely somewhere between 6 to 8%, as well as obviously the repairs needed, and will renovate the homes for resale, list the homes, and then once someone buys the home, sort of enter into the closing process. So that's at a high level. That's sort of how the iBuying process is working today, and how we sort of see it moving forward. It's not every home that can sort of go through this process. iBuyers are largely targeting sort of the segment of most common segment of home transactions, which is between the $100,000 to $500,000 home price. And you can see here that's about 74% of home transactions, which is where the sweet spot of where we're seeing iBuyers look to target the market. Opendoor was largely sort of the pioneer in iBuying and founded 5 years ago, and what that's meant is that they've been able to aggressively expand, make use of capital, and sort of hire aggressively, and obviously sort of expanded the largest number of properties and sort of markets today of the sort of different iBuyers. OfferPad is another early sort of company in the space, but you see here what that means and how it stacks up over time in terms of listings and properties. Of course, today the market has expanded quite significantly. Zillow, in their earnings call, sort of mentioned that they are going to aggressively target the iBuying segment and sort of really transition their business model away from sort of Premier Agent and list and agent lead gen. And there's also startups that are also sort of continuing to crop up. Knock is another company that's in the space. Another sort of smaller company is Perch, which is today in just one market in San Antonio. But you can see here there's a good chart that was put together in terms of the markets that different iBuyers are in today. Of course, targeting markets where they believe they can have a good handle on what the market looks like. And you can see through job listings as well as where they plan to move into in the future based on sort of where they're hiring, et cetera. So today, interesting to see the market. I think the two big questions will be sort of Redfin and Zillow over time and what they look to do in the market, as well as sort of Opendoor's sort of strategy. When we talk about Zillow, Zillow obviously has significant advantages when it comes to sort of data and scale. But again, it's also transitioning their business model pretty substantially. So when they announced this news in April, shares actually plunged about 9%. But Zillow today is used gathering about 164 unique users a month. So you can imagine the sort of data advantage they have. Also potentially, advantages in terms of providing leads to their agents for these listings. And also, but what they believe is really sort of opening up sort of the total addressable market today, which they believe sort of at the top of the funnel is sort of slowing down, and opportunities to move into obviously the $1 trillion home buying segment per year, as well as the mortgage origination market in which they acquired a mortgage company earlier this year as well. So those moves into sort of larger markets over time is what they believe that despite sort of maybe short-term hits to profitability as well as sort of the business overall, that it's a necessary move for them over time. And it'll be interesting to monitor in comparison to some of the other iBuyers who are in the market today. So, of course, just to close up, I think it'll be interesting to think about sort of the end impact on residential real estate. Of course, we didn't talk anything about sort of the macro real estate landscape today, and I don't think that would be a good use of time. But a lot of iBuyers believe that they can actually manage a real estate downturn through obviously the capital they've raised, as well as believing the use case is actually even makes the use case even more important in a downturn as people need to sell their homes, which is what Opendoor CEO Eric Wu has said in the past. So it'll be interesting to see over time how quickly this market grows and what is the overall impact on sort of online real estate transactions as well as total homes sold over time. Morgan Stanley and others have believed that it's going to be in the hundreds of thousands of homes by 2030. Of course, we don't know whether that'll be higher or lower, but I think understanding the end impact and how this affects sort of the home buying process over time will be something to monitor for a long time. So I think that's sort of the high level look we wanted to take today at the real estate space. We're going to be doing more research on the space, so please reach out with any questions or if you want to chat, and the email and contact information is here. So we'll take a few questions, I think, and then wrap up right after that. So one question we got was, can you dive a little bit more into sort of Zillow home buying move and sort of their advantages or how they're thinking about it? So as we mentioned, I think Zillow certainly has an advantage when it comes to distribution. They can use their agents to buy and sell properties, and they can also obviously create sort of a new business all around sort of providing the leads, the listing leads to those agents over time. I think they understand, they have a lot of sort of insight and data around understanding where people are buying homes, zip codes, et cetera, and obviously the users that comes with that. So certainly would seem to have sort of a strategic advantage. Of course, they do have can't really upset the agents as much. So I think there's concerns around how quickly they do plan to grow, although it seems like, based on sort of what every sort of public mention is that they do plan to move more aggressively. But certainly the sort of reasons are there based on monetization as well as data and sort of advantages. So I think those are sort of the high level things in which iBuying isn't necessarily just about sort of a small shift, but really, a much bigger shift into something that can encompass these big markets like mortgage, et cetera. And I think that's how Zillow is thinking about it. So is there a CRE space that is not seen as much innovation in the last few years. Actually, one area which over the last few years, I think one thing that was interesting was real estate crowdfunding was an area that was a very early, a sort of nascent area for real estate tech investment over the last few years. And we did see a lot of startup formation and companies in the space, and some of which did raise a significant amount of capital. I think over time, that space has certainly fallen sort of out of favor in terms of funding. And I do think we're going to start to see more consolidation in the real estate crowdfunding space, as has been alluded to by others in the industry as well. So I think that's one area where we haven't seen as much. CRE has been slower. I think it depends on how you define it. In terms of what you define as CRE tech, do you include everything that's around sort of smart buildings, selling into building owners and tenants, whether that's around spatial visualization or companies that are sort of providing sensor technologies around HVAC, et cetera? Is that all included? But if you're thinking about sort of more CRE in terms of investing as well as others, there have been companies that have sprouted up recently, but it's a space that I think will continue to evolve more gradually. There's been surveys that have been put out that they don't believe CRE will meaningfully change from a tech perspective in the next 10 years. So it'll be interesting to see, whether some of these companies will help sort of engender some more change in the space. I think WeWork is certainly doing that to a degree, but we'll be monitoring this more closely and putting out more research over time. So what are traditional real estate residential brokerages doing to improve their tech capabilities? I think, a lot of them are trying to build out more technologies. Keller Williams, for example, a couple of years ago, if you go to their, website, they are saying that we want to be a technology company, essentially. And they are building out certain apps and tools to sort of enable that. A lot of companies are aimed at sort of just enabling agents, making them much more productive, whether that's providing chatbots to enable sort of everyday conversations that they might have, or just tools to make their workflows much more efficient. I think it'll be interesting to see over time what happens, because both the iBuying model as well as the low-cost brokerage model, which we haven't talked about, but which Redfin is very much a part of, which are reducing commissions substantially down, is impacting how traditional brokerages think about the space and how sort of what the agent will look like over time. So I think there's a lot that's going to change substantially, and a lot of companies, as we have highlighted in the webinar, are investing behind some of these changes as well. So you see some of the brokerages launching corporate venture funds or investing in or becoming LPs in different venture arms, but also looking to build out and acquire companies as well, which we've seen, we didn't talk about, but also we've seen some smaller M&A on the real estate tech side as well. So just take one last question, I think. The last question is, what are we seeing sort of the large CRE tech services, the large CRE services players like Cushman & Wakefield, JLL, and CBRE doing on the real estate tech front? I think actually the CRE services players have been, I think, quite active in terms of thinking about the space and making moves, whether that's partnerships, working with certain providers. Cushman & Wakefield, for example, has done several partnerships with companies like Lucid, investing in funds like Metaprop as well. JLL has their own corporate venture fund now today. But CRE services, I think all of the firms are, and CBRE has also done, a lot of work acquiring companies like Florid, for example, and building out sort of a unit there in terms of digital. So I think all of the firms are actually thinking about this quite heavily, because it does, impact how they can, provide value as well. And so I think over time we'll see more moves there, whether that's from an M&A standpoint or whether it's just from building out sort of digital units to really build out capabilities here, because a lot of it really affects sort of what they do, whether it's from a security standpoint, whether it's from just understanding sort of use of space and all of the companies that are helping on that front. So I think there will be a lot more activity on that front, and expect the largest services players like CBRE, Cushman, JLL to be part of that and investing behind that as well. So again, I would just encourage, reach out if you have any other questions by email, and we'll be putting out some more posts and research and real estate through the end of the year and well into next year as well. So look out for that on our blog. We do have two posts, two teardowns we've done on WeWork and Opendoor that are already on our research portal if you want to read those and look sort of more in depth at those two companies. So with that, we'll leave it there, and we'll see you next time. Thanks.